Good morning traders and welcome to Tuesday the 17th of January. My name is Mark Owen and today I'm going to bring to you morning update. Okay, so I've got to be honest, it's not been a great start to the new year. We waited for certain corrections in the market or certain levels to be reached, and what we've noticed is maybe not just through lack of liquidity, but the market is very jittery. So we're offering a word of caution. Because we've got serious news announcements out this week that could cause even bigger spikes. And I would say the talk of, or the main news that we've got coming out today is the Prime Minister Theresa May speaking on, let's say, how hard a Brexit it's going to be. And we only see one way for the pound. However, what we're seeing currently is a sell-off in US dollars, and this has led to a yo-yo effect, and it's actually led to me pulling the plug on trading for this week. I've taken a couple of losses through Monday, trading dollar strength, and what I've found is that although the level was held, as you'll see in a minute, the bulls came back in only for them to reverse again. So even though we've got quite a few nice technical levels approaching it yet again, the news coming out through today through the World Economic Forum, we've got multiple speakers regarding from the Fed speaking. We've got Dudley speaking later on today as well, although it's not showing on the news announcements. But obviously the talk that we've got to watch is, how is sterling going to fare? I mean, we had an interesting open yesterday, or I should say Sunday night. It gapped at just over 200 pips on against the greenback. Now, usually after a gap, you will see that the gap closes, so we like to fade the gap. But on such a large gap, it was something that I avoided looking to trade and thought we'd see potential more downside. But what we've seen is that rather than the pound getting strong, it's just the dollar that's getting weak. Whether that's people offloading their current positions, waiting to see what happens this week, with the inauguration of Trump on Friday and his speech, and other FOMC members and Yellen speaking. You know, it's a continued battle of news. So January is generally an iffy month to start with in terms of liquidity, but the world is being driven by serious news announcements. So I'm offering an air of caution, and you know, sometimes it's better to sit on the sidelines and wait for a direction. So if we look at the dollar index, we see that we've got a lovely resistance level built up here and a channel that had formed. It broke out, and then last week it came down, touched the level that we were looking for. We had a nice correction, it started to bounce, and this is what we were trading, this bounce here, because our long-term view is ultimately dollar strength. The question is, where is it going to correct to before the dollar strength starts to play out? If we're going to see the interest rates that they're talking about, the 3 hikes this year, and the biggest employment president that's ever been, you know, the talk is fantastic, but so far we're not seeing that in the charts. We did have pretty much one directional dollar move, so it was due a correction, which is why we were looking at this technical level here. However, looking at what's happening with the yen this morning and potentially gold, we've seen a breach of key levels. So we'll probably see now that if this is the case, we might see this level here breach, and if that is the case, it'll be a continued selling of the dollar until we get down to this channel here. So it's going to be an interesting week to see what happens. So this is why I advise that it's potentially not a great time to be trading, sit on the sidelines. So if we look at the euro dollar this morning, we can see it's come up into near enough the 107 area, into my zone. But one thing that I look at when I'm looking at zones is the correlation between the DX, and if we just go back a slide, you can see it's not in the zone, so there's no correlation here. It's suggesting this has got further to go, and this may have a little bit more room. It may stop and turn somewhere in here. Then look at the reward. Do we have a reward? Not off today's candle. So ultimately, I'm just going to skip on this and wait till we get a clearer opportunity. I was selling euro through here when it moved, but look, it's just come back to test again. So literally we're having this yo-yo effect. It came up, there's just no clear direction. So we could be the best forecaster in the world, but when the markets are going up and down like this, we're just going to get taken out, and unless you're very aggressive with your stop, and you might get stopped at break even. But then if I start doing something like that, then I'm amending my rules, and it'll be sod's law. The one that I get stopped out at break even would be the one that actually, if I'd have left to stick to my rules, it would be the one that goes on and run. So I'm just gonna sit on the sidelines, look for key end of day signals right now, because it is too turbulent out there. If we look at dollar yen as well, we can see that it's now actually breached the 114 level quite substantially, and we're at 113.20. So there's if we are going to see, this is where we need to watch the dollar index and see if we are going to break that key level. If we are going to break that key level, then a retest of 114.20 would be a nice trade down to about 111. So there's a 300 pip potential reward, but we know how yen moves, and if the markets are scared, they're going to run to safe haven. So we're going to see a strengthening of yen, we're going to see a strengthening of gold. So trade your rules, whatever they may be, but we could see a strengthening of yen, and this will probably see one chart we were watching was this key level here, but we're also watching euro yen as well for a similar sort of thing. Now cable, excuse my coughing guys. Cable, we saw the 200 pip gap down, and this is closing the gap quite nicely. Obviously we could see absolutely anything here with this chart today, so don't try and guess what's going to happen. Hard Brexit, clean Brexit, soft Brexit, who knows? And even when we do know, how is the market going to react to it? Ultimately, everyone's saying a sell-off in pound, but right now it's the sell-off in the US dollar that we're seeing. So where could it go? I mean, obviously sentiment is bearish on this market, but let's rather than trying to forecast it in this sense, wait for the news to come out. Let's see how the markets react, and then look for our technicals and create a fundamental bias from that point of view. Now gold, we're getting the rush to the safe havens, we've seen yen strengthening, so this could be an indicator. The fact that the yen has broken through will probably give us control that this is now going to break through. If it does, we get an opportunity to get long from 1200 up to 1250. If we're going to get a reversal, i.e. rejection of this candle, then we can look and sell end of day. I did get taken out on this chart. I was selling at 1200, or just above 1200 I should say, 1203, 1204. I had two nice reactions, didn't quite move far enough to get to my target one, and came back and stopped me out. So that's the risk of trading. You're trading the dollar strength, so if we were trading the dollar strength, we'd be looking for a sell-off in gold, and it's not worked out this time. So now it's a matter of sit on the sidelines, and we're going to finish off with one little quote for you guys. And the quote is, "I'd rather be a pilot on the floor wishing I was in the air than a pilot in the air wishing I was on the floor." Now think about that in terms of your trading, and let me know how it resonates with you. Okay, so that's it from Phoenix Blue today. We'll be back tomorrow morning, and I wish you well. Stay good, disciplined, trade your rules, and take care. Bye bye.